Good morning and welcome to the Breakfast Club. My name is Darren Hancock. I'm your host today. Look at what we got today, non-farm payroll. Look at, we had some, oops, get that out of there. I got my tablets going here. Stand by. Precision mode. How the heck do I get out of there? There we go. All right. Where are we sitting today in the grand scheme of things? This is non-farm payroll news report. Look at that. Slammo. Straight down. Didn't even give us a little pop-up. We're a little early getting started on the show this morning, which is okay because I have a few people that turn up in the morning. I will put my morning breakfast club on. I'll start that call. If people turn up, great. If they don't, we have the usual views in the morning, which is okay too. All right. So, how are we preparing for the weekend? I'm looking for British pound. Let's go on the, since the non-farm payroll opened up, the news report came out. We can get pretty significant displacement to the downside. I like this idea of 50%. Keep your eye on this area. Is it going to keep on a level of sensitivity, or are we going to start pushing back up into the optimum trade entry, return back into this little consolidation before we drop down this morning? So my eyes are here looking at this retracement, and I'm looking back into optimum trade entry of this fair value gap here. We're getting on top of this inversion, becomes now an inversion. We get on top of the inversion here and get any support off of that. We're looking for further upside, looking at 61% at least. Hourly, same kind of thing here. Looking for this kind of retracement back to a breaker inside a little bitty inversion fair value gap here. Yep. Daily fair value gap, we're kind of inside that right now. We did a couple of pipettes below this one. This low here was 4830, 4825, 5 pipettes below that. We still look at this area here. So my downside, I'm looking for in here. Consolidation. We've returned to the top of the consolidation. Up here, hit this breaker. Reacted off of it. Now we're coming back up, looking for a premium level inside this small run that just happened during non-farm payroll. And this looks like the top of the new week opening gap. Is that it? No, it's not a new week opening gap. Let me get rid of that one. Delete that. Look at the midpoint of this daily fair value gap. Take another little pull off of here. Looking for areas of sensitivity. CAD. Looking to run out lows. Came back into the not sure why I have that marked. Top of the fair value gap here, which is now the inversion. Coming back inside that. Wicks do the damage, buy does the respect. Breaker. If the American dollar continues to gain in strength, Canadian dollar will continue to push down. If this price leg here continues to the upside, this could be a bad news for the Canadian dollar. $139 again. Look at that. That price leg up lines up perfectly with this old high here. So think about that in terms of the next price leg down. So looking for a discount here before you start pushing up for higher prices. So if we have this breakout above these little small run highs into, we want this to stay open, so we want this to be the breakaway gap. This will be an area of sensitivity here. Now if we pull, this is just finding my 50% marks, that's all. I'm going to put these in here. And then we'll put that as the objective is going to be price leg terminus. So when we hover over it, we'll know that that's the then you hover over its price leg terminus. So that's where we're looking for. Delete. So I'm looking in here for a drive out. We have a break in structure. I like to see a body get above that, create a fair value gap above this, and then get into it. Not so strong when I see fair value gaps below this breakout with a fair value gap below it. Usually in here you see we have a break-in structure to the upside. Then you start to get this fair value gap form. That's where you get in for that high. Now that we've broken that high, I want to see a fair value gap above it. But anyway, that's my kind of a working through this price leg here, and it's that being the upside objective for the next price run. So we got another 3 cents from where we are now. NASDAQ, or the natural gas. You can go back and see on all my previous chats. That's why I'm keeping a video diary of, this is pretty much the video diary of the Breakfast Club and the predictions and all the things I've kind of learned from ICT over the years on how to look for markets and how to trade specific entry points. And I've been looking at natural gas being in this extreme discount for quite a while now. I got into this back in April or May, and I see this as being a huge potential for natural gas over the next couple of years. Excuse me. So this is what we're calling for last week. There's a slow, steady grind up. Then we had a breakout this week, which was the last couple of days. We've had a push up above this weekly high here. Then if we push through this weekly high, I'd like to see this remain open. I'd like to see a fair value gap form right here, this remain open, and then start pushing for higher prices. So I'm looking, if I was actually looking at this as a hourly or daily or 1 minute candle, this is exactly what I'd be looking for. I'd be looking for a fair value gap to form, create a breakaway gap the next following week after that. So this is let's say this is week 1, so it's week October 1. October 2, we get a small fair value gap inside with a fair value gap that would form in this week. Sorry, I want to try and be precise. My buddy who's an engineer wants me to be more precise. So I want a fair value gap to form next week. So at the end of next week, that the wick here, the wick low to the wick high here, will create a fair value gap. That I want to remain some degree of openness. So even if we came back inside that, touch the top of the fair value gap here on the weekly, and then broke away and continued to the upside, I'd be okay with that too, because there's a small portion that's left open as our breakaway. Though it can return to the top of this consolidation and find some strength and support off of that, which would be the midpoint of this fair value gap on the weekly. Then I want to see if it starts to do this little 1 week at a time creeping around stuff, eventually get some support on top of here, push through, get some support, push through. So I want these to turn into inversion gaps, inversion fair value gaps, to continue pushing for upside, where we have a full gap, which is a gap in price where there's absolutely no price delivery on the buy side or the sell side. And that to me is a big draw on upside liquidity, along with more SIBIs, no buy side and no buy side. Equal lows. There's a lot of draw up there at $5, which from back here is like double your money. This is the daily, so we did have some nice gap ups and we took off. We gapped up today, which is awesome. But as you see, we do have these moments where we have some significant retracements. I want these to remain, to create our breakaways. That's the stuff on the other side. We've got a small gap over here at 416. That's the gap we talked about on the weekly. So anyway, I like that. I definitely like natural gas for a long play. Looking at, we've got the open just starting now. Australian dollar, they've come back into that price imbalance again, hit it perfectly, and we're kind of waffling now. So keep your eye on this 1, 2, or so yeah, I guess it could be so 1, 2, 3 drives down. Is this the reversal? I don't know. A little too early to tell. I'd like to see this now come back up if we're going to look at this as a low, which probably not likely when you consider that there's equal lows. You probably don't want to leave that untouched before they drive price back up again. Not that I'm looking to trade Australian dollar at all. It looks kind of sloppy right now, but they have got some support off this inversion at price imbalance here inside this daily fair value gap, bottom here, or the top here to the bottom here. So we're looking for, what am I looking for in here? Probably a further drive down to rejection block. I'm really stuck between the rejection block here and do we revisit the 50% of this range to get ourselves a premium to sell at a discount. So my eye kind of goes to this area here and says, are we done inside there yet? Or are we pushing down for rejection block? That's pretty much all I've got inside that right now. You have the midpoint here, a fill of the fair value gap, which is a return to the breaker. And then where do you go? That's a wait and see game. So Australia. Now here's the stronger of the two pairs, holding its price. It's in a tighter consolidation. We have a fair value gap. We've gone through it. We've come back inside it to the very bottom, refilled the rejection block, or sorry, refilled the inversion fair value gap. So now we've hit the top of it right here. Are we starting to push for our higher prices? Because we've run out the lows down in here. We've rebalanced this little price imbalance down in here. And we still have left this untouched. So this is our breaker, last up close candle before run below old lows. We've come back into the breaker. We've hit 1, 2, and we haven't hit the third level. Changed it up. So for me, this is the piece that's still open. We have the high. We have the high here. Which is the threshold, mean threshold of this breaker. We're looking for it to provide us a level of support in there. And then running for these equal lows down here. Does it finally give up the ghost and follow in step with the Australian dollar? If the American dollar continues to put strength on, eventually this will have to bend the knee. And I don't know any of the fundamentals behind that. Doesn't matter. I just look at these next arrays here and down here. Let's look at this here for a second. You pull your fib tool here to here, 50%. 62% lines up with pretty close to the threshold of that breaker that I just outlined there. So we could run up to 62%, which is a good premium level to offload at lower prices below the rejection block and inside this wick. This wick has its various levels that we'll talk about if it starts to get back down there. But right now we've got this fair value gap turning into an inversion gap. We've come all the way back to the bottom of it, balanced it, and we're sitting right on top of the range there. So I think myself, I like to see it push up into this breaker one more time and see what we get there. See if we get a reaction off the 62% level. So I'm going to leave that there just so I can go back to it in the next week and see what we end up with. So here's the daily on the S&P 500. Let me move some of these out of the way because we've hit some levels there for sure. We drove through it into the bottom of the daily, or into the bottom of the monthly, into the midpoint of the weekly, and the is that the, did I delete the wrong end? Yeah, I think this is the, it can't be. I was thinking this might be the new week opening gap. I'm going to delete this because if I need to draw them in again later, I will. I don't want them to confuse me right now. So the new week, the weekly fair value gap, the midpoint, we're kind of banging off of the midpoint of that and the bottom of the monthly fair value gap right now. So we've worked out all these levels nice and clean. So do we get a continuation? What I want to see is a continuation, a big bold candle, either to open up next week on the Friday, might just stay inside the range here. Big bold week opening up and driving down, coming back up into Tuesday, and then continuing down for our drawn liquidity down here on the weekly and daily low. Lots of liquidity sitting down below these lows. A big pool sitting in here and some candy land sitting down here. All right. Let's go to the daily. I think this is where my let's change that up. I don't want anybody telling me that I play with things after the fact. Are we in the 5th today? We're on the 6th today. Yeah, I'm still bearish in oil right now. We've broken through this weekly fair value gap here. Now we've come back into the daily and the weekly. This becomes an inversion fair value gap now. So now we're looking for more downward draw on oil. So I hate to say it, it's already ran out its price leg. That was the price leg we mentioned yesterday, from low to high, and then from low to high. I think this is why I was calling for 95 bucks. Like if you take the precise levels here like this is why I was calling for $95 and I didn't get my 95. I'm almost sure that's why. Yeah, it was 94.70, so even I was off a little bit there. 94.70 was the upside range, and I was out by 73 cents. 73 cents. Pretty good price leg though when you look at this on a daily basis. If you're out 73 cents for a almost $20 run, I wouldn't slap myself for that. So this is definitely bearish for me in the short term. For me, it's got to get above here, get some support on top of this weekly fair value gap in order for me to find some strength in oil right now. I still believe there's a big draw in liquidity at the monthly and weekly below the price, which is in the $78 range or less, even down to 74 bucks for oil. That's where I'm looking in terms of oil. All the time we are getting support off of these higher time frames, inversion gaps. I'm still bearish on oil until something proves me otherwise. We have, yeah, that's the daily right sitting inside here. Let me just draw that guy out a bit more. That little blue there. So here's where I'm looking. So we're just kicking off of here. We dipped into it again. That's the inversion. Now we're looking for a drive down to rejection block, which is also the top of the weekly. And then we have the top of the monthly, which is clearly where we've bounced off in the past. So these areas are areas of sensitivity for a reason. Look at that high. It did dip down into the close of that fair value gap. But then we ran back up, came back to right on top of it again, like filling of a fair value gap, break-in structure above to the upside with that fair value gap I mentioned earlier. That's the kind of thing you want to see. And we're talking about daily charts here. So we have a break-in structure to the upside with a fair value gap that forms. If you come back into that, that's your loaded situation. But that's July, and you finally get into it in the middle of August, or down to that midpoint when that whole Jackson Hole thing where everybody meets and has that meeting at that table where everybody has a chat and talks about the analysis, and the market finally says, okay, here's the time to turn right here. Let's stop the charts right here, and all the fundamental analysis and all that stuff halts it right there on that moment where they finally knock the gavel and conclude the meeting, and then they go back up that way, because it's all about fundamentals that technically nothing here whatsoever can be looked at patterns. Nothing in here, all that technical or all that fundamental analysis. Not that I mock you guys, which I kind of am. It's just there's so much controversy in technical and fundamental analysis that everybody thinks they got the right method, right? Well, algorithmic analysis, a little different. It is a form of technical analysis, I suppose. And anyway, that's my point. That's what I like to see. That's a typical structure that you see a return to inside confluence, monthly, weekly. It respects the weekly open or weekly high down to the weekly open, which is also the top of the monthly. Pushing for higher prices. Here's the same thing again. So again, here's a classic repeat of a pattern. Classic repeat of this pattern I just mentioned here. We have a break in market structure, right? We have a fair value gap, break above. We want to get back into it right here. You don't get the opportunity, but there is the top of the weekly. So one of our rules is you return to the top of the weekly, find some strength, and then start to leave town. So that's another form of entry. So entry number 2 in this particular case. But if you don't want to wait, your entry is I want to wait for a return to a fair value, and if I don't get it, then I don't get it. You continue to break to the upside, come back down, once again find strength off of the top of the weekly fair value gap, running for old highs here. You push up higher above this high. Then as we start to reversal and return to top of the fair value gap again, into it, which is now inside that place that you're looking for. So look for this again. Where does that pattern repeat itself, where there's a break in market structure? Here's your upside. We have a break in market structure here. There's a fair value gap that would form from there to there. So if this candle here opened right here, came down and tagged it, you get long right there for a run above these highs. But now we have a fair value gap that occurs above this, right there, and the next candle opens, trades into it, which is perfect place to get long, and you start to run for old highs back there. Same kind of principle all over again. Break in structure, fair value gap. We don't get in on this one, but it's a continuation. They're still driving for higher prices. So look for that pattern repeating all the way down from 1 minute all the way through, because price is fractal. Price is fractal. Every freaking time frame offers you an opportunity like this to get in. It happens every day. It doesn't stop, like Michael says. Okay, here's a little gold. Let me put this up here and make sure I where's my we should call this gold live trading October 6th, 2023. I still like this. We're getting where this is all consolidation, so they're booking buy side and sell side here now. Slowly creeping down. We've taken the sell side here, and we've taken the sell side again. We have not taken the buy side yet. We have the daily fair value gap. Look for a run back up into here before the continuation on the downside. So that's what I'm looking for. There's no buy side. We just had the slight buy side taken right here. We're still inside the top of the monthly fair value gap. We're kind of working that top 25% of the monthly. If you kind of break this into the $25, $50, $75. So there's the 75 level. We're respecting it. And we're kind of working that top 25%. So we haven't even come into the 50% of that monthly fair value gap yet. So what I would like to see is this sudden run back up into here, the 1835 range, the bottom of that fair value gap on the daily, get some support off of that, and continue driving down for lower prices on the gold. That's my tweak on that system. On gold, I'm thinking of more downside, and I'm looking for 1787 as the further. And I'm going to put this in the little video diary here. We're looking around that range. Come on. 1787, the inevitable run inside that gap. So on the monthly, yeah, a full fill of that one. Because we have a monthly fair value gap right here below that. So we have big draws on gold further down, monthly, and there's a huge weekly in here as well. So there's a lot of pull, a lot of draw and liquidity to the downside inside that huge range that was created there. So if we're looking for a discount inside here, we're looking for a return back into these levels. So I'm looking into the 1700s now as my downside objective. I was calling the 1800s. Now we're calling the downside on the 1700s. And eventually, if we get a return to this order block right here, at 1726. If we get to the bottom of the weekly inside that range, 1683. Those are the levels that I'm looking at. I'm not saying it's going to 1683 just yet. Right now, my short-term objective is inside this and a fill of this fair value gap on the monthly, And if we get below that, come back up, find some support, we're looking for further downside to the drawn liquidity on the monthly and the weekly. That's where I'm looking for gold. Oh, I did have a gold thing there. Stand by. That's October 5th. October 6th. Weekly. See these draws in liquidity? That's the monthly. Weekly is sitting right inside here. So there's a lot of draw. We have downside objective here right now of 1802. Run those equal lows out. And then do we find some support off of this breaker here? Last up close candle before I run below these old lows. Do we find a level of support off of that? Yeah, let's look at tech now. Tech has returned to, this is what we're kind of looking at this morning with S&P 500. I wanted this to get back to a discount range, 50%. So we've bounced off the bottom of the monthly fair value gap. Bodies are definitely respecting it still. And we've pulled back into a discount portion of the range that was created during the non-farm payroll event. Gather up some orders just inside the premium level, and we're starting to drive down for lower prices. So here's my next downside objective, and I'll put this here today so that people can see. Not that I have to prove myself to anybody, but there we go. It's already hit that objective today with the opening of the non-farm payroll event. It opened. Let's go to the 30-minute. That way you'll see right on the 6:30. There it is right there. It opened and shot straight down to weird, random place perhaps? Was it random? A completely random place? Top of a fair value gap? With precision, and then react off it back to an area of discount or premium to unload it at a discount. So we've got just over the 50% mark. So if we do continue, see this, you know, when you get a feel for these markets, there's a tendency for this to run back here and then push back up one more time, and we've got all of these weekly new week opening blocks that are open here for price to run into. So if we come back and just tag the bottom of that inside this inversion fair value gap, because right now we have no inversion fair value gap on the 30-minute. Is there one on the hourly? No. 4 hour. Yeah, right there on the 4 hour. Oh no, it's not. We came all the way back to the body with precision here. Oh, there is a little tiny one right there. Look at that. Inside there. Now, some people look at this and they go, well, you're talking out of your ass. All right. Carry on. I'll continue using this and we'll see what happens. Like I'm form-fitting it. I'm not looking at a 4 hour, so had I been looking at the 4 hour, that's what I'd be looking for. If that was my time frame to trade on. There's your inversion. You're inside the inversion. Find some support or pulling back away. If I'm trading on the hourly, 15-minute. There's an inversion here, which is that upside 62% of the range. I look for premium levels and I look for key levels of support. Here, here. I cut through candles. We always cut through candles. And you call it before it happens, then people can't say, you know what, that's bullshit. Well, no, it's not. Or it's luck. I'll tell you then, I'm sitting on a horseshoe. So that's 50. 62% puts us right in here. So I like this pocket in here. Yeah. So this may have one more push up before we have a dive down. If not, we're still inside that fair value gap. We've hit the 50%. And we're looking for further run on the downside. Keep your eye on that. We'll come back to that. We have 4 minutes before our $10 o'clock run. Run up to a premium. I'm looking in here, here, and then further downside. All the time this supports price, so we have a break in structure here with a fair value gap. We come back up, order block, because you put your stop loss here. Usually we put it above the candle that makes that fair value gap. But again, hindsight easy. You put it above the high, the most recent high. And if that is the order block, we look for support at the low, open, and threshold. We got the low and the open. Bodies respect that. Wick does a little bit of damage, but still holds price. Continue down. You're aiming for your first objective, second objective, and a fill down here. We have a fair value gap that formed behind this instead of in front of it. But you come back up. We filled it with precision here. And then we drop down. So we're looking for another run below here. Close in that fair value gap here. We also have a little pocket available up here still. Look for this threshold to hold price. If it doesn't, then we might be running back up higher again because we have a break in structure now. We look for a break with a big bubble candle and a fair value gap, and then that's again a basic entry that we're looking for to show that we're heading for the upside. It's the same kind of principle here. Break in market structure. Right there. We've broken it. Now we have a body. Look for a fair value gap. One forms here. Another one forms here. We come back down to it. First objective. We come inside it here to get long. Unload here and here. You start unloading your positions. Then you're looking for this little price imbalance right here. You unload there. Then we get a reversal start to happen. Wait. Big bull candle down creates a fair value gap. We're going to come up inside it. We have low, high. So that's the low here. The open of the mitigation block in this case, because we have not broke the old low. So you come back into low, open, threshold. Look at threshold, hold, price. Right off there. Perfect. Precision, meeting, fundamentals. There you go. Perfectly ran off of that mean threshold of that last up close candle. Then we drive down. Break structure. No fair value gaps until here. You come back in, fill it. We have bodies that start getting above it. That's where I'd be like, oh, I don't like the fact the body's getting above it. But because you got your order block sitting right above here and you got this fair value gap, now becomes an inversion gap. The moment we come up and we fill it, and we get below it, come back into it. That's our inversion fair value gap. It's supporting price. That would be my line in the sand in that inversion gap. I wouldn't want it to break that old high. Run back down, break the low. We have a fair value gap that does not form below our price. But you're still aiming for your objectives. Now you're taken out. So that's why we always pay the trader. You would have scalped some off of here between these lows. And that low, once you get below it, you scalp some more off there. There's another low there, you scalp some more off there. Always scalp off before the lows, because you get these retracements like this. Now, I don't know about you, but a retracement that came from here, if you did not take a portion off there, that's an 18 handle retracement. If you like to lose 18 handles worth of profit, so be it. This is scalping. This is precision scalping. So pay the trader. Morning, Kevin. How are you doing today? Running late. How's the morning going so far? So far, it's looking pretty good. This is our non-farm payroll event. Opened and whammo, it didn't even pop back up. So even for a, usually you'll see a pop back up, the first initial run up, and then you go, well, when you see this, this is the Judas swing. Always anticipate a return to the next direction. So usually you see a pop up, and then it'll slam down, or it'll pop down and then drive right back up again. So the first initial run up is the Judas, and then expect it to run back in the opposite direction. Didn't even give us that. It just opened up and shot down. So it wouldn't have followed the general rule on a non-farm payroll event anyway, and would have just shot down. Because a lot of people, if you did follow that rule, you'd be like, oh, okay, it's going down, which means it's going to go up. And it didn't. It just kept coming all the way down. So we've just pulled the range from the beginning of the first swing all the way to the bottom. We're looking at 50% and 62% of the run. If we look at it from here, or the high that was created in the day back over here, 50%, we've hit that already. We haven't hit 62%, so we have now a breaking structure to the upside. Breaking structure, fair value gap, fair value gap. Do we come back into these and find support at them to push for these highs? That's what we're looking at right now. So that is GBP. We'll put some little yellow boxes in here so we get an idea of what it is you're kind of looking for. Key offs here. So we have a break, we have a fair value gap that forms above a breaking structure, another one that forms above breaking market structure. We have these little tiny inversion fair value gaps now that have formed because we've got through the top of them, and we want to see these provide a level of support. I like to see this stay open and then start continuing run for these highs here, pushing into this fair value gap here. So your signal or your price and stop loss will go down here, because I don't want this. If this fills, then it's not done down here yet. I'd like to see this one just come back, get filled, this one to stay open, and then continue pushing for these highs here. And don't forget to scalp some out as you go up. Not that you're actually trading this, because it's non-farm payroll Friday, but if you were. Now, if it takes out these highs before it returns to this, I wait for those new fair value gaps to form above these old highs here before I consider pushing for higher prices up here. this is an early entry we'd like to get on this. I might actually throw a trade in here. It's a really kind of a consolidated area. And I'm just kind of trading the breakout here above a recent high. Not a strong breakout because I want to see this. I want to see big bold candles get above these things. I see it's popping up now. So we didn't get our entry, which we're waiting for right there. So we're fractions of a penny short of our entry. But again, we have a break in structure, bold candle. Does this form another fair value gap? We'll move this sucker into here if that forms. I don't want all this to get taken out here yet and then come back. Those are our objectives, to scale out some portion of our funds, right? So again, if this creates a little high here, that'll be a scale out point. It is also this is also your silver bullet entry. It's the 7 o'clock or 1700, which is 10 o'clock. This is the one just before 10. That is the 10 o'clock reversal. So we'll get long on that. If it comes back to me. That might be a little premature. But I think I tried to get in there. It's right on the... Okay, that one will work. Stop loss will go down here. Top of the fair value gap now. I want to see that stay open now, and then I'll start pushing for higher prices here. I'd like to see that now. We've come through it. Provide some sort of level of support when we come back into here. So you got one on the downside and you got one on the upside. So I don't want to see this level get broken again now. There's this, come down and just get the support off of here and continue pushing up. Now yesterday you said like to wait for 12 minutes after and take the second fair value gap. Yeah, but in this case I'm looking at a break-in structure with a fair value gap. This is a stronger support for me. Like you're right, typically you wait for 12 minutes after the fact to see what we get that forms. But because this is a break-in structure with a fair value gap that occurs above it, and then another one occurs above it, that would be the breakaway. Then the return to seemed like a logical level for me to get in. Otherwise, the typical wait for 12 minutes after the fact is your typical wait time. But if you see something as obvious as this, then that's a classic entry setup, right? So we're going to put the wolf on this, and we're going to start feeding the wolf. Does that make sense? Of why I went that way? I didn't. Something has to override the rule of the 12-minute rule, and that's not a Michael rule anyway. That's just a Darren rule that I usually go with until I can find something that really supports an opposite direction. Okay, so I'm going to put some. I'm going to feed the wolf here inside that fair value gap. Take a piece out of there. Ooh, yeah. No, that's fine. Be curious, man. That's what we're all here for. Sorry, excuse me. Every time I drink coffee, it clears me out. I get a good cough going on here. So I want to see this with some sense of strength now. I don't want to see this banging around consolidation thing here. I want to see it start popping back up. I have no stop loss according to this, so I'm going to put my stop loss back here. I don't want to see this come down into here now. I want to see that just get some legs, get out of here, create this as an inversion fair value gap here, get on top of it, start pushing up for these higher prices here. Caught that really good on my live account right here. This being the demo, of course. Close another portion out there. Feed the wolf. Ow! Feed the wolf. Oops. The wolf was pigging out there for a second. Okay, good. So now I'm going to let the rest ride, and I'm moving my stop loss now to a profitable level. So now it's a zero stress trade. And my live account, I'm going to move that to a zero stress trade. Take another 10% off there. Ow, feed the wolf. Ow, feed the wolf. Oh, I closed it all out. Crap. Oh, well, my bot's now loading on. I'm going to take that off of there. Well, the bot's loading on for... Yeah, here's live account. You said no trading. LOL. Yeah. No trading for new people. I've been doing this for 7 years, so I'm looking for my opening. Demo or live. Yeah. That's for you people. For new people, if that's not your setup, Friday's not your day, you don't trade. I'm looking for my entries. I catch my entries. Now, that's not saying you should copy me. That's why I'm saying don't trade on a Friday. If non-farm payroll is not your thing, don't be in a non-farm payroll event. But if I see an opening like this, that's just too yummy for me to not get into. Does that make sense? Sorry, I don't mean to be rude or I'm out on all, because I don't feed the wolf on the way up. Yeah. So I don't mean to be bragging or anything like that, but I look for, if I see a nice keen entry here like this, I'm going to jump in on that. I'll jump in on a live account, and I'll jump in on it in a demo account. So this is, again, we're playing here, and now I've got the bot running. So we'll see how well the bot does in this environment. I've got somebody, and I can hear somebody in the old Breakfast Club this morning. Who's this?
Richard.
Ah, Richard, morning.
Good morning. Sorry, I'll turn off my mic.
That's all right. Euro and GBP are my go pairs. I trade. I've seen the fair value gap with you. Yeah. So we have a. This is just an observation I've made. I don't think Michael's ever made a reference to it, but it's an observation that I've made, and I kind of documented here in this video journal. And that's when I want to see a break in market structure to the upside, I like to see, here's the difference between the two in terms of the break in structure. I like to see a break in market structure with a bold candle and a fair value gap that forms above the break in structure. So here, there's a break in market structure, but there's no fair value gap, right? So what happens is we had a big return back down too, but here's a slight break in structure. So we have the little consolidation here. We have a bold breakout candle above it. We have a fair value gap that forms. And then another fair value gap that forms here above the inversion, or above the reversal. When you get that happen, especially when you get two of them, I want this one to, so my philosophy or my thought process is, I want to see this one stay open and form a breakaway gap. This one is allowed to come back and fill. It came all the way back, filled it, touched it. My stop loss goes down below here. And then I'm looking for a run above this high, this high, and this high as quick scalps. So I'm looking for a break-in structure with a fair value gap that forms above it, not below it. So we have a break-in structure here. There's a fair value gap that forms up there. We return into it and we get long. Here we have a break-in market structure above fair value gap, return inside it, and we start to go. So that's a general rule I want to see happen. So we have, in this case, we have a break-in structure. We have a fair value gap that occurs below it, not above it. But even though my bot is chomping at the bit, buying all this stuff, let the wolf go. The wolf is hungry, so I let the wolf feed. And we'll see where it goes. Stop loss is down here. And I think I don't think I set my... I'm just going to turn off any more future buys. So the bot's not going to buy any more fair value gaps now, because I think I've loaded in 2% of that account. I think I have my, yeah, it's 2% already. So I'm not putting any more in that. So that's a full 2% account. Richard, good morning. So Kevin's saying good morning. Yeah, he's saying good morning there. So now with GBP, do you then switch over and look for fair value gaps on Euro? I normally do, but trying to get away from it and take one pair per session. Euro seems like the weaker of the two here today. Let me have a look. Hourly, it looks like it's doing the same thing, right? It's reaching into this fair value gap, is coming back into a premium level. So pull your fib tool from the top of the, excuse me, look for that non-farm payroll event that occurred, 50%. We're looking to get back in here. What have we got in here that provides us a level of confluence? Well, you don't really have anything except this breaker here. Last down close candle before a run above an old high. that created a return. So you've probably got right at 62% there inside this breaker, high low. You're looking in there. 50% is sitting right here. But like you say, yeah, it seems to be the weaker of the two. If we go back to the pound has already broke that 50% of that, the whole range today already. So it seems like the stronger of the two for sure. So if this now comes back in and fills, give me some more fills here. I want that last one to kind of stay open. But see how this is not a fair value gap above this high? Watch what happens here. If it takes me out and we lose some money on it, it's not a big deal. It's a demo, and I don't have any more trades on my live account. I've already closed out my live above these highs, taking my profit. Now for here, this we're into, all of those are being filled now. I want to see that kind of hold price here as a breakaway. But because we don't have the fair value gap above, it doesn't act the same way. Just a small observation I made. So we'll see now if it does come all the way through here and take us out. So now it's loading on. All those other limit orders are now opening. It came back and tagged that. The spread didn't get me in on that last one. Look at this as our order block. We're below it now. So low, open, threshold, which is the rebalance of this little price action here. That's what I look for. Good. Now we're full back there. Now do we both push through it? Push through it. Push through it. Yes, there you go. Good. And now we come back into it again. But it's this order block now I look at. Now that we've popped above it by, now does it come back to the body and push through, push. I want to see big energy now. I want to see this just launch. We've come back in, gathered up a bunch of orders. Now the bots are looking for a first exit at 122, 112, 122. Okay, it's looking up here. It's ambitious. It's ambitious. So what are we going to do when we hit the first objective? Feed the wolf! Ow! Feed the wolf. There we go. We hit our first objective right there. Feed the wolf. Feed the wolf. So there's a bunch of positions on there. Holy crap. We've got 2% of our trade on. Yeah, way up. I like the way the wolf thinks. Move a while to get the food. Oh, yes, baby. So remember, the wolf's looking for a high up here. I'm looking for key levels to get off at. So I'm looking at the opening of this fair value gap. I'll take another portion off here, and I've got my wolf set for 10%. I can take 10%. I can adjust whatever percentage I want out of this thing. So I'm going to take 10% as it starts to climb, and I'm moving all my stop losses. Even though the wolf is supposed to do it for me, the wolf will move all my stop losses accordingly. But I am going to move them all to break even and make these no stress trades now. There's a lot of trades going on there. They're all in no stress. So now I'm going to look for 50% of this range here. Holy crap, look at all that money. $1,500 already. All right. Love the wolf. Feed the wolf. We wanted to come up into 50% of this range here. So now I'm going to take this here. I did some grounding work. I don't know if you believe into this grounding work. This morning, I went outside, kind of sat down, or didn't sit down, because the freaking ground is really frosty right now. I got up in the morning, I walk outside in the dark, look up at the stars, take some deep breaths, super inflate my lungs, and really try to connect with Mother Earth, universe, all that kind of stuff. If you're if you're into that, I just wanted to kind of free myself of some negativity and fully embrace the universe here. Here's another 50%. We're going to feed the wolf again. We'll tap this a couple of times. Ow, feed the wolf. Ow, yeah, baby. And see, unfortunately, my wolf only acts on one of these levels. So I have to tap it a bunch of times to get my 10% out of the hole. There, it closed out one. Now it's going to look for another one. And it will start taking percentages off there. I'm just going to look here. Which one is it? Oh, it's taking it off the bottom one now. So it's going to slowly eat through all of these one at a time. So I like to tap them and feed the wolf a bunch of times on the way up. Ah, the wolf worked lovely. Lovely today. We've hit the 50 percentile. Let's just, the wolf seems hungry. Let's feed him some more. Ah, yeah, feed the wolf. Feed the wolf. So you go, Wolfie. Okay, easy, easy. Don't get greedy now. All right, so that's just me trying to chop some of these trades down. So we got a lot. So we still have 4 trades on. And we have a zero stress moment here. And as soon as it breaks that high, technically they'd all move to break even anyway. My girlfriend's mother does it every morning. Feeds the wolf. Is that what you're talking? My girlfriend's mother does it every morning. Oh, yeah. I'm thinking feed the wolf. Your mother, your mother, your wife's girlfriend feeds the wolf. Oh, you mean like getting grounded and stuff? Yeah. Sorry about that, Kevin. I'm like, feed the wolf. Oh my God, she's got wolves. I was in the wolf mindset there for a second. Sorry about that. Yeah, the grounding. I got it a little bit late. Sorry. Yeah, it was kind of something my shrink had said. Hey, look, man. Find a way to get grounded and ground yourself out with some, let go of some of that negativity, let go of all that crap, that trauma you've seen in your career all these years, right? And find a way to release that. And here's a good opportunity to do that, is kind of get your feet onto solid ground. And there's some studies, and I don't know how accurate they are, and I'm not a proponent of speculation and stuff, but I thought, I'm willing to give it a shot. I'll give it a try. So I kind of, I've heard people that have these scopes, they put them on their body and they measure how much of the electrical discharge they have from their body. And it's quite alarming how much grounding has influenced or worked with some people. So for me, it's just to get out there and touch the ground. I just like the coolness of my feet because I have that nerve problems from the spine injury. So it's really kind of a great feeling of that coolness on my feet because I have this burning in the nerves and the toes. So it feels nice in the morning. I don't think I'm going to be doing that at 30 below in winter when it gets really, really bad up here. It'll be like wave my feet outside the door and say, okay, I'm grounded. Time to go back in.
Let me interject on that, if you don't mind.
Yeah.
You can, I have heard people going to sleep with a grounding wire on the bed.
Yeah, they put that like a foil sheet or foil across there and then connect it outside, which is great. Just don't get into a thunderstorm, right? You end up getting it just zap you, fry you while you're in bed. I thought about that.
No, they put it on their ground of their house.
Right.
So it's not outside.
Yeah, so they do it all inside. And it's been kind of a fun experience. I think we're hitting, if we look at these what do we have, 8 trades on here? Add that to our little list there, Kevin. What's our total now? Given it was my bot that gave me the 8 extra trades to our little thing. But hey man, I'll take it. I think that puts us somewhere around 20-0 or something like that right now. Not that I really Should be focusing on that and stay grounded here. Now I'm going to take another portion above this. I see this little swing here. I'm going to feed the wolf again. Oh yeah, feed the wolf. Okay. 62%. Oh, I'm going to feed the wolf again. Take another portion off there. So now I'm working on these. I got 1, 2, 3, 4 lots on here still. Looking for a fill. I'll take another chunk off here. And then when we finally break that first swing point there, the bot will take off yet another 10%. Yeah, still nice to know they work. Yeah. So you see what we did here is this now becomes the fair value gap you want to key off of. Now, look at this. This is interesting because we're going to leave a piece on for this because I do believe we have started what I've been trying to show for the last couple of days is these things. Look for that. And where does that put us? Right at this high. So if this is the price leg we're looking for, that's going to be the upside objective. And then I'm done for the day. Well, I'll still stick around here, but that'll be I'm just going to get this piece in here. That's going to be my next objective. Let me make sure that I have that sitting there. All these stop losses now. I want to move the stop losses from here. And I want to move them. Sometimes you got to move them down to move them up. These are all going to be zero stress trades now. There we go, those three. And we're going to move them there, there, and there. Zero stress trades, and they're all going to haul out $300 a piece, 100 and some odd bucks a piece if they all work. So that's my first objective, or next objective here. We'll hit the wolf 3 times. That'll take 10% out of each one of those. And then we'll leave some on for there. So we've got like 10, 20, 30, 40, 50%. I saw my buddy Gary yesterday and I was telling him about my wolf, and he's like, so why aren't you sitting here smoking big fat stogies then? So I'm going to point to him today and tell him to look at my video and say, yeah, I told you the bot works. Here's a video showing it working. And yes, I took some off on my live. I think eventually I want to get to the point where if I do end up selling this thing, it'll be just teaching people how to use the bot inside these daily sessions. But there's some fine tweaks I want to make, and there's some other ideas I have for it. So the hedge, I would like to have used the hedge portion this morning, right? A couple of minutes before this would have been beautiful. The hedge would have opened up, slammed down my stop loss, and carried me all the way down here. And this would have been, and it would have been exiting on the way down. That hedge would have worked quite nice, but I think there's some more little tweaks I want to make in that. Again, if you see what's happening here, this is why when you start to study this simple thing like inversion fair value gaps, it's the new thing. Not the new thing, but it's the thing, man. When you start to see this stuff, it becomes very, very clear that we have a break in structure with a fair value gap above price action and another one here. So we want to see this now provide a level of support. It does the same thing that we got into here. We have a fair value gap Or was it here? Yeah, this was the one we got into. So we have a fair value gap above and another one above that. Fair value gap above, another one above that. We want to see it come down, provide support. It came down all the way through to the top of this one. So it can come all the way down to the top of this one and then continue back up again. So again, that's the kind of thing you're looking for. And because our stop loss is sitting here, which is where this one was when I put this stop loss in, I'll take these guys and I'll push them here. That way I'm following the same set of rules for this one. So if it drives all the way through and takes them out, I'm good with that. I'm happy with the run that we just made because I think we just hauled in some serious pips there. Nice to know they work. In the euro at 105.27 and out at... Oh, you got in and out? My brother, where'd you go? Oh, look at that full return. Nice. Nice. And you got out at what? 105.27. What did you get in at? Were you doing time? Were you trading at minutes, or what were you? What were you on, the 5, the 1? Because you like to trade 5 usually, right? I'm trying to find your. You got in at 105.27. 105.27. So you got in somewhere in here. And out at 105.47. So you got 20, you hauled 20 pips out of it. Good man. All right. 105. 105. I'm trying to find your exits thing is. I said a fair value gap formed and then I went in. This one here is what you're looking at? I'm trying to find your... What time frame were you trading on there, Kevin? Let me quickly go back here and see what's going on. I got the very bottom of the 10.28. So you're going in on the minute. Let me go over here. 10.28. Oh, you get in here. Good. Like, see, that's the same thing we just talked about. We have a break-in structure to the upside. Fair value gap, fair value gap. Come into that fair value gap. 1, 2, 3 is your entries. And you're starting to reach for here. And then you're starting to reach for midpoint and then the high. So good for you, bro. Man, you're going to be... I tell you, I'm not kidding, man. You're going to be buying your own prison in no time. You're going to be kicking butt. I like it. And 2 months. You've already been doing this for 2 months. Unbelievable. Good for you. So see how that is respecting that little fair value gap there? I want to see some juice. Hit me up, man. Run me up. No, stop saying that. I don't want a prison. Oh, here, let's feed the wolf. Let's feed the wolf some more. Oh, feed the wolf. Ow, ow, ow. I should have one of those little sound bites on the sideline here. Like Kramer with his freaking buttons. All right, so have we broken? Yes, nice. We took some more off there. Now what I'm going to do is I'm going to move my stop loss to here. Why am I doing that? Because this shouldn't revisit here. And as soon as we break this high here, the bot will take out another 10% of everybody. So look at this, 36, 104, and 160. As soon as it breaks that high, 1, 2, 2, 1, 2, 1, 2, 2, 1, 2, 1, 2, 2, 1. Oh, it's this high here. It has to break that high. I'm going to take another junkie out of there. Jesus, we're still 1600. See how all that scaling out I've been doing, we're still sitting at 1600 in profit. Getting grounded, boy, that sure felt good this morning. And we stopped trading on a Wednesday. You wait for non-farm payroll to settle itself out, and sometimes you can get in on these nice little dandy trades after non-farm payroll event has occurred. And that's exactly what we got in this morning on this British pound. I actually said if I were to hit a Mega Millions, I'd end up buying the jail just to blow it up, so a bunch of admin had no place to work. He's not bitter about administration at all. You need a button that you smash the wolves eat that makes it howl. Yeah, I've got this button, but I couldn't attach any sound bites to it. So I think I'm going to have a little, yeah, I have to smash a button on the side of my thing here and get the howl going. Or you program your bot to add the sound. Yeah, I don't know how to add sounds. I don't think you can do it on the platform that I use. I don't think you can add sounds to it at all. But I think I'm going to find a smash button. I think that's going to be my modus operandi. People will hear the alpha wolf, the werewolf bot having the sound bite. So see how we're hitting this little fair value gap in here now, and we want to find some support at that. We have a break in structure again. We'll fair value gap, come back, find some support. My stop loss is below the low because there's no extra little gap inside there, so it's going to stay there. And if it comes back against us, who cares? It's $74 for one of them, and I don't know how much for the others. We've still got 3 lots on this thing. I'm going to close out the feeder. Feed the wolf. Yeah, that one's done. Okay, now we're down to 2. So we're down to 3 lots. Let's look at how a review of all the feeding frenzy that went on during our run to Valhalla. So always look for these objectives. Feed. And I don't care. If it would have turned against us and come back into this consolidation, who cares? We nibbled off some stuff. This is how my boy Kevin made his prop firm good. He went in, and I'm going to take some out of here because I'm going to close one out altogether here. I'll keep one more on there. So yeah, that's because that's cheese eating. That's nibbling, man. And it's nibbling at specific PD arrays. We're getting out. We're just nibbling away at specific PD arrays that we talk about inside fair value gaps. And I haven't even given my bot the opportunity to do what it would do, is just completely run all the way up and wait for here and only take out 10%. So it's not a perfectly autonomous bot by any stretch. But if you wait and you know what it is you're looking for, you wait for an optimum opportunity to use it, you still have to manage it. It still has to be managed, as in this case, to start scaling out, because it loaded on 2% of my account, which is a lot to load on. I did not change the settings for what it loaded on. I was just going to use it just to feed that one trade that I had on. And then all of a sudden it loaded on those other 8 trades on top of that. So there's 9 trades this did all together. We moved them into stress-free trades as quickly as we could. That's the objective for this, is to try to go to those. You need to bottom and smash the button or program your bot. Yeah, look like the wolf was having spaghetti with those lines. Yeah, Yeah, so you're looking for a way to get to zero stress as quick as you can. So that's the new philosophy I want to use, and I'm glad that you guys are turning up for this, because it kind of forces me to stick to my rules, and these are the rules we're looking for, is quickly get to profitability and move your stop loss to zero stress, especially when you got that much on. Here's that price leg I was talking about earlier, and something I've been harping on the last few days, talking about price legs. We talked about price leg for oil. This was the oil daily price leg right here, from here to here, then from there to there. That was the projection. I said 95 originally. I just want to make sure that's clear. I said 95, and the actual projection based on this price leg is 94.70. So I was short 70 cents for the high. But you know, when you're looking at since June of this year, or you realize that this is a price leg and it starts to break up in here, from here to here is a 992 pips. I don't know about you, but I would like to have 992 pips if I could recognize that was the price leg, and you're in that day after day after day. That's not bad. I don't know many people would turn that down. Anyway, let's get back to this guy. So I don't want to see it get below here again. If it comes below here, I'm going to close this out. Even though it didn't quite hit our objective yet, there's no reason for it to start getting down into here again. So it's bouncing off these old highs here. Now we're back into this order block, bottom, open, threshold. So if that starts to dip down, I'm shutting this baby down. I'm out. So this could just turn around and start pushing back down again now, because it did break this objective here. Oh, did it not? Yes, it did. This wick right here got above here. So you'll see my reason why. Yep, see how I don't want to see that get below there. So that's not bad. $3,000. Well, we'll call it 3,000 points because we don't talk dollars. We'll just talk points. And we're just short of the price leg yet again. But this could come back into, if it comes back into here, we got one here, fair value gap, this one below. If it comes back into here, fills this one, I'll put another short trade on for a long to run these equal highs out above. Stop loss will go down here. Again, we're in a premium here now, so you'd be careful. Actually, no. I said I was going to stop. I'm going to stop. That's the mindset. Stick with what you're saying. I'm out. For the rest of the day, I'm done. So if we see stuff here now, I'm just going to day trade this or paper trade this. And that's my rule. I'm going to follow my damn rules. That was our drawdown. Can you see that? That little piece right there. So it just popped below that thing was enough to trigger me to say, I don't like this coming all the way down here. So now we're back up into order block. So when I look at this stuff, I kind of look and say, which order blocks are we between right now? And when we start getting really close to banging around and going into this consolidation thing, that's worry and stress you don't want, especially if you've had a nice little run for the day. You're inside this fair value gap right here. We want it to provide support. So when we come down to it, we tag through it. Then we come back up. We want to see support at the top of it and continue on the upside. So when this came down and tagged it, I'm like, okay, that's good. Let's continue. Push for the upside. Take another 10% out there. But it didn't. It stopped, turn around. And when it comes back into it, again, I start to go, nah, I'm losing interest in it now. Because this thing should be providing, like we had down in here, it should provide a level of support to continue. And we should see this explosion, the big drive up, right? That's the whole point about inversion fair value gaps. News gap is filled completely. Take your money and run. Dollars, lots of dollars a day you were expecting. I can't read that other side of it there. Since you got surprised by the 2%. Awesome. Yeah, I did get surprised. I forgot that the bot was loading in 0.25% for every one of those entries, and I can adjust the percentage that I load on. Usually I put around 1.1%, so it makes up for a total of less than 0.5% for a whole cluster of trades, because it puts 4 trades on at a time. So here's the good reason why you kind of get out when you start to see that. That's my reason. It comes back down and hits it. I want to see it eject off of it. If it doesn't and it comes back into again, I lose interest in it. And then when you see it breaks this low right here of that order block, I go, now we've broken. Now this becomes a validated order block. Now I think, all right, so now I'm stuck between here and here, and I've got an inversion gap that's not solid. So my decision is, if it comes down here one more time, gets anywhere near this, I'm out. So that's why I get out there, because now you think all I've got is here and here to return to order block and continue down. No fair value gap, but that's my continuation down. And where am I reaching for? The next order block, which is here. Now, if I've already tagged the top of it, the body of it, it went right through it. Boom, right through the threshold, all the way through the bottom of this inversion gap. It's eaten through that already. You should definitely be out before your stop loss gets hit, because that was the one we wanted to provide as support. So if you continue to hold on to it, hoping that you've changed it, you've married a trade that is a failure. So I said, if it came down here, I'd buy this, your paper trade right here. Only if we see a nicer reaction off of this, here's what you do. This would be in order to, sorry, I'm going to have a little cough here. I'm getting them. Hang on, I'm going to turn my sound off. Sorry, I needed to have a good cough there. I had to turn my sound off for a second. So what we're looking for now then is, if it comes down here, you don't want to just take this, because now you're assuming that you're going to take the bottom. There's another little fair value gap down in here. This one didn't hold. This one didn't hold. This one has been eaten through all the way. We didn't just come down and tap and leave. We ate all the way through this one as well. So look at the range from there to there. Are we back in a discount? So you're looking at multiple levels of see, we're into optimum trade entry now. Now, does optimum trade entry line up with something that supports price to go back up? We do. We have one sitting right in here. Optimum trade entry right there, 79% retracement. We're sitting in there right off the top of that thing, that BISI right there. Sorry, and let me turn off all this underlying crap here. So it came back, hit that. Now, are we getting some reaction off of it? It's just banging off of it right now. So stop loss would go down here. But I want to wait. Just I want to see if this pushes through here now. Optimum trade, if you lose more than 79% of your optimum trade entry, it shows me, if I go beyond that, then it's more weakness than it is strength. It's not a really nice deep retracement for a push up. It's showing you signs that it's probably going to run the low here. So we want to see this hold now. That's the next inversion fair value gap. Oh, not inversion. It's just a a BISI. When we come down into it here, that's a full fill. If we lose this order block's threshold on a close, then we're looking for lower prices. Look inside this one here, because we came all the way through it, right? Now that becomes, we have a body that gets through it, then that becomes the new inversion fair value gap, and we can come back inside that to the midpoint. We don't want to see it come all the way back and fill it. We want to just see to the midpoint as possible, and then we key off of that and go back up again. Confluences, there's all these different things you look for. So you want to see this kind of hold price now. Take your money and run. Yes, that's Richard. I was like, hey, wait, we got a new person throwing comments in there. That's great. And you can still speak in the Breakfast Club, Richard. That was the whole point of having that available on Skype, so people can actually chat. You're welcome to chat anytime in there, man. That's why you're in. You can pop in and talk on there. That's for my my regulars, the people who've been around for a while. They get the opportunity to sit there and have a voice-to-voice chat, and that's what the Skype Breakfast Club's for. Otherwise, people just gotta type on the side. We're still waiting for Kevin to get himself a microphone. Now that he's live, he can buy himself a beautiful microphone headset. He can start himself a base station at home. So we're dipping into this guy again. So do we get the fill and then a reversal? I don't know if they're going to see that on there. It popped up on my screen. I got you. I'm going to see now if it pops up live on the screen, because that pops up in the center part of the screen. It's being monitored by my live channel. So if it pops up on the screen, everybody got to read what you just said. Yeah, didn't work. That's good. There's a reason. There's a reason for following the rules. See, I said I wasn't going to trade again. And remember, my original entry was going to be here, and I was going to put my stop loss there. And that's why you don't pick bottoms. You wait. Now this is filled, but it's already gone through that threshold. So for me, we've got order block, come back into the order block threshold of that order block. Into it, we're pulled off of it. Now we're going to come back and tap it and continue running down to this lower stuff. So we ran our objective for the day. We juiced the crap out of that trade, and 9 trades for the day. That's not bad. Not quite the 2% I was gonna risk, but well, you wouldn't be out of the trade yet, but looking like it will get it from this block. Yeah, just the way it's kind of eaten through that. See how the body closes now below our fair value gap? When you see that close below, that's a reason to get out for me. It just violates the rule that I want to see something. A wick can come through, but when the body busts through something like that, unless it's got a nice little fair value gap below it that will provide some support, like we had here this morning, where was it? Right here. See how this one, it went through it, but it came back to a logical level of, we wanted this one here to be it could fill that right back to an area of breakaway gap support, and it hit it, and that's where the entry went on. So we're at the rejection block right now. We've hit rejection. Oh, wow. Can you see that? I didn't see this. I'm just pointing it out now retrospectively. So have a look at this right here. You see right there to right there, there's a little tiny fair value gap there. Now if I draw this top line and I drag it over from the bottom of this wick, or this candle right here on the wick, look at that. That becomes a little inversion. Not that I would have found it or saw it or would have even traded off of it. I'm just looking, I'm always looking for a place to say, why there? Why did, yeah, it's the rejection block. But then my eye came over here. I went, wait a second, there's a little tiny bump fair value gap there. And it came down and it, we've already traded through it. So now it becomes an inversion fair value gap. We lost 1, 2, 3, 4. Who would have thought that it would have stopped right there and found support at that? I couldn't have told you that. If I would have said, okay, now let's pull our fib tool from the deeper range from here to here, what would that have given us as a retracement? Would there have been a confluence at that level? 50%. Look at that. Boom. That's 50% of that range. So, and we just dip into it, get a little discount, and off you go. So now it's run up above the pool of liquidity here inside. Now I'm going to show you this stuff so you kind of get the habit of training your eye to look for this kind of stuff. Now if we look for that becomes an inversion fair value gap if we get on top of it. So we've come up, we've come inside of 50% of it, push through, push, 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 push. I feel like I'm back into birthing babies again. You can do it. Push through. Push, push, push. Bear down. Bear down. Brrr. Don Percy, back in the day in Manitoba, used to do the Don Percy growl. He'd sit on the radio, and women who are pregnant, who are waiting for their babies, used to go, okay, we're about to do... we're about to help old Mary here get her baby out today. I want you to bear down, bear down, bear down, bear down. And he'd just do that every morning. Somebody would phone in and say they're pregnant and they want the Don Percy growl. And he'd be like, bear down, bear down. And it would be a standing joke in Winnipeg, Manitoba. So anyway, there we go. We got the push through. Now we want to come back, find support out. This becomes an inversion now. We want to see this hold price comes back in and it's just tagging here. Now it leaves. That is the leave right there. Whapa! Provide support. Come back into this wick. Wicks do the damage. We'll see where the body ends up. Look at that. It's like we're telling it what to do, hey? We're like bossing it around. Going to order a new mic this weekend. Oh, brother, since it's supposed to rain all day tomorrow. Yes, do it. Hook it up. Get in. Let's have a chat so you don't have to sit there with your fingers typing away like crazy. You can get into the morning scrum with the rest of us here on Skype. In the Breakfast Club. The more people, the merrier, until it gets to the point where there's too many damn people in here, and then we're going to start cutting them loose. So this is more for the people who've been sticking around for a while, followed me from the beginning. The loyalty, I love the loyalty, so I'm all for stick around, man, and I'll share whatever I can with you. We're all going to share our own knowledge. We're all learning stuff. That's what this thing's all about. There's our support. Our bodies are respecting the candles, and now we're getting our support above. So you see, if you're really bold, you put your stop loss here and just let it run. That's how close you get. That's how much you can really trust these things. So now you get, if you're into scalping real quickly, you scalp out a portion at that fill. Now we're looking for further upside. Get through this. Create a fair value gap here. Come back, find support at it, start pushing through. And we may end up getting our objective for the day, which is right there. Happens every day, man. Where is it targeting? But where is it targeting? It's targeting the rest of the price leg. That rest of the price leg still has yet to fill. It's just come back inside it. The leg will finish off right there. And then after that, we're looking for all this candy land. Look at all that liquidity sitting up there above these orders. There's a whole pile of it up there. Look, it's just a mess of candy land. That's where you're looking. That's the target. This was just the objective we're looking for the price leg. I just want to see the price leg get filled out so I can say, haha, told you so. It worked. Not that I want to say haha, I don't want to rub it in. I don't want to be that guy. I don't want to be that guy. So there's the fair value gap. We just asked for it to form. It just did. Now let's wait for it to come back in. Tag it. We want to see this stay open. And this one now become the new inversion fair value gap. Right there, right there, right there. That's where you want to find support. It can come back into the middle of it. I'm all right with that. I don't want to see it fill. I want to see it stay open now, create a little breakaway. So come back in, tag the edge of it. 1, 2, 3. See, the temptation is to say, go throw some more trades at this. But now we're in a consolidation. We're in the premium portion of this range here. So are we going to come back to a discount to get some prices to run above these old equal highs up here? I think so. But we're paper trading the crap out of this right now. We'll paper trade here, here, and here. Let's drop some lines. So there's your first one. Second one, third one, stop loss. And if I'm wrong, thank God we're doing it on paper. That's the problem when you create one, they all go kind of bent on you. So there's your entry 1. And if I still had the bot turned on, it would be like clink, clink, clink. Put all 3 of those in there. 4 of them. Now start getting some legs. Find some support at that and leave. We don't want this to fill in. Again, it can come back to 50%. But if it comes all the way through it again and starts to bump back up, then we're into that consolidation crap where you're just going to get beat up inside consolidations. And a more of a reason to say stay out of a consolidation. I'm just trying to give you the how you rock climb in price. This is from the mountains of Alberta, Canada. We're looking for these little footholds. And just imagine these as little footholds in the market that you're looking for a step off of, right? Michael gave this analogy like rock climbing, and it's perfect for us up here in Canada, right near the mountains. We're looking for a foothold on price to continue to the upside. So we're looking for a run above here. This foothold is these inversion fair value gaps. So as we run through them with a body and then you come back to them, those are the things we want to see price get on top of to continue running back up. So we've got a paper trade there, a paper trade there, and a paper trade there with our stop loss sitting down here. And as soon as it breaks that high, it's my rule, man. Nip a piece off. You take 10% off of there. If it breaks this high, everything moves to break even. So nip a piece off right there. So 1, 2, even though they're right on top of each other, we're scalping, man. We're not doing a long distance trade here. We're scalping. And this is how a brother gets a live account filled. Right? Sorry, I've been missing your thing here. Going on to order about where. Gonna order supposed to rate. But where is it targeting? Oh yeah, we already got that part. So we already told you where it's targeting. The here, here, and preferably above the highs that are further back there. Sorry, I'm just doing a text here. I've got a friend of mine. He's like, the markets are going to drop. I'm like, yeah, they did. But now they're back. Fundamentals, got to love them. All right, so does this make sense? Does this make sense to you guys, Richard and Kevin? You understand why I'm looking at these key levels and waiting for them to become inversions? This is just a trading setup that works. 911. See, my brain picked up on that right now. 911. My eye, for some reason, was quickly drawn down to the time. 911. So this is what we're nibblers get funded. Yeah, you got that right. Okay, so you can see how this inversion fair value gap, we want to look for this climbing structure, right? So we've nibbled a piece off here, we've nibbled a piece off there, and your stop loss, if you're super keen, you want this to stay open now, you slam your stop loss up to just under break even on that point right there. So if it comes back through, there's a little tiny fair value gap that's formed here. It's forming, is it forming above the market? No. So it's forming at or just below. So do we come back into it here and get more support? Again, these are small, little tiny footholds. We got flat ground here. Now we're starting to find these little tiny ruts that we put your foot in. Don't twist your ankle on these ones, guys. Keep your powder dry. We're just playing here. But again, PD array to PD array, I'm trying to show you how each candle has specific PD arrays it can key off of whilst reaching for higher time frame objectives. Each one of these candles aren't just random candles doing random crap. They're reaching for arrays. Pull your array from here to here. You'll see that that's a premium or discount, right? We have a sudden run up. Where's your premium? Look at that optimum trade entry. Ba-boom, it's gone. It has objectives. When you study this stuff over and over again, you will see a repeating structure that proves that the algorithm is up to its usual trading. And once you understand what order blocks are, each one of these key areas in order blocks, you'll see why ranges, fib tool, order blocks, all that stuff make a hell of a lot. Oh, looky, looky. Looky, looky. Do we sing a hallelujah chorus here? Hallelujah. It's a good day. This is a damn good day today. Look at that. Then we take out the little check mark, put it in our box, and we say, is it possible to trade are price legs visible? Do they happen eventually in the end? Do we see them work? Yep. And I kept closing out my bot, but that's okay. That was the reason I wanted to get this out of here. It came down. It would have taken me out my stop loss because I was trailing my stop loss up too fast. Now, here's where people would say, hey, man, you trailed your stop loss up too fast. That was your objective. Why don't you just wait for it and leave your stop loss back there? Well, as you saw, I capitalized on the last, I think it was almost 3 handles that we took out of here. That would have been a sizable drop. And if it had continued down, because we lost, the rule is it broke below, broke below, broke below. How many times does it have to break below a structure for me to say, I'm out? Unless I'm going, well, maybe it's retracing back into this range here, 50%. It broke my rule. I got to get out. Stick to your rules. And eventually it panned out. Big deal. Big deal. Stick to your rules. Stick to your freaking rules. And that's why I love you guys being around here. Thank you so much for coming out because you really helped me stick to my rules. But here's why our paper trade. How's our paper trade doing today, guys? Look at that. Bang. Our drawdown is, I hate to rub it in here, but my drawdown literally is less than 1 pip. It's 0.9, or it's 9 pipettes. That's the drawdown because of the rule of inversion. The inversion fair value gap. You come on top of it. What's my objectives? Well, 1 there, swing, swing. Now you've got 10, 20, 30% of your trade off, and you've been collecting 4 pips, 6 pips, 10 pips, and we're still in, and we still got 70% of our trade on. here's the next little Planswell. Scammers. All right, I have to head out. I might be stuck to work on Monday, so I'll catch up with you Tuesday. If no overtime, I'll be here. Enjoy your weekend. You too, brother. Thanks for popping in. And again, I'm going to keep congratulating you on your success. I am so happy for you. I'm so proud of you, man. Good for you. I love that you're turning Michael's stuff into some profitable stuff within 2 months of learning it. You've got your setup. You're disciplined. That's where you're going to continue to have your success. And I welcome you to this Breakfast Club. Thank you for bringing your energy and everything here. And have a wonderful weekend, my friend. And be safe when you get to work, hey? And I'm almost coming up for the end of my day, which is 9:30 this morning. I started, we're just over 2 hours in right now. I've got a couple of more minutes. I just want to see how the rest of this kind of order pans out. Look at that. It's coming back to find support on top of, strangely enough, our price leg now becomes a support for fair value gap. Are we going to keep pushing for higher prices? Who knows? Only the shadow knows. So now, stop loss here, that was down here. Well, I want to actually, there is no fair value gap there. The rule is be down here. So now that's guaranteed we've taken out 30% of our trade already. 70% is still going to remain in profit at the end. Zero stress trade. Zero stress trade. That's what we're going to do. Over and over. Rinse and repeat through the rest of this until all our funded accounts are paying us huge, huge money. So I'm glad Kevin's on board now with his funded account. That's our objective, is to get everybody funded. Well, whoever turns up anyway. All right, now I've got to pull back to a higher time frame and see what the heck I'm looking for. Okay, right there. So next objective, which you're just about to hit right now, you'd scale out a portion right here. We're going to put that line there now, and we're going to move it up to here. Go back to our 1 minute. And tippy-tappy. Stop loss. Just because we're so close to that, I'm getting out right there. So 90%. Sorry, if we come back into here. I don't want to see it come back and tag that. I want to see it finish off. We're so close to our objective. So we've got above this one here with a body. I don't want to see that one lose. I don't want to see the end of that lose, and we've already lost the bottom of it now. So you could say the middle of that wick, and if we lose that, it's going to come back and tag this one more time. We're out. All right, we're out. So we closed our final trade off right there. I think it just hit our stop loss, cleaned us out. So we would have had 4, 6, 11. That would have been, oh, and this guy here was our another one. That's 14. So those would have been like 10% at 4, 20% at 6, or another 10% at 6, another 10% at 11, another 10% at 14, and that's 70% was taken out right there at 413. So that in total would have been an average of more than 13 pips. If you got 70% of it sitting there. It's now, see how this order block here, we've broken below it. We're going to come back into it, tag it. Now we're pulling away. I want to see it run through it, right? This is just a run on stops maybe? No, it's coming back into that fair value gap there. Equal highs right here probably. I'll probably say the midpoint of this. These are the equal highs. If it touches the midpoint and then leaves. That's why when we had our stop loss down here, if you're willing to hold it for a longer run, it's too close, too late in the day for me. We're getting close to lunch hour, so you can get into that consolidation over the lunch hour. You've taken out huge lion's share of your run for the day. Then Look at that, it just dipped in there. And it's back into here, body now. Do we react off that? Threshold. That's how I watch price. I watch PD array to PD array and how they act off of each one of those PD arrays. See that? Off that body, we got a pullback. Now, it may suddenly pop back up, but the fact that it hit it and pulled back in the lower 1 second time frame, that's reaching back for a lower fractal PD array. That little pop down you saw, that's doing that in the 1 second or whatever. It's reaching for its lower PD arrays inside whatever crap's going on inside there. So if it bounced off that and we get a run back up again, we're looking to extend our PD array. So now we're really kind of stuck. This is not an order block yet. It hasn't been validated because we have not got above it. We've got below this guy, so that becomes validated with this down close candle. We've come back inside it a couple of times, tapped it. Now where are we reaching for? Well, we've got this PD array below us, and if we're in a premium portion up here, and this is what the old bear flag people believe, we got to get through here, then start driving up for higher prices. So now we're coming into body again, threshold, rejection block, wick, run. Now look at the fact that this is a consolidation. Do we hit the rejection block and start running back into this? Or just clean us out? Just tap our next little, so we can put another little check mark in here. We want to throw one up there. Come on. You can do it. Come on. There you go. Ping. Oops, I moved that out of the way. That is the top of there. With that, ladies and gentlemen, we have a incredible day in the market on a Friday, non-farm payroll. That is some more advanced ideas on how to trade the market using that foothold stuff. Waited for non-farm payroll to do its thing. After it settled down, we're looking for a retracement back into here. Once we have a break in structure, as in we saw right here, then we're waiting for that fair value gap to break market structure. For me, that's my general rule. And we have that break in structure with a body and a fair value gap. Great. Get in on that, start running for your PD arrays, which is what we did all the way up. And we have more support that does the same kind of thing. Break in structure, fair value gap, come back, find support, leaves it open. We want that to remain a breakaway. Your stop loss is going to sit down in here. If you're wrong, you want to keep it tight because that's the rule. Same kind of thing again. We don't have a fair value gap above, so we did get these deeper pullbacks. Look for the fair value gap just to fill in by itself. If you're looking at the range, there's your look at that, boom, right on 50%. Continuation on the upside. This is our upside objective, and then eventually the higher time frames. We saw the price leg form beforehand. I was calling the price leg beforehand. We got almost there. Then we saw the opportunities dwindling away, so we got out. And then once we under better analysis, we end up seeing this little piece in here. Not that we would have reacted off of it, but that's where we discovered the inversion fair value gap finally held price, which is also inside this bigger range here. And we got a deep retracement. We used this one to pull our fib tool from, and it was over 79%. So it was the bigger range here. which is interesting because if we say this is the expected price, no, I was trying to make something up there, forget it. But then we did another pit. Once we decided to stay out of the market, we looked at the paper trades. We looked for an opportunity for these inversion fair value gaps to hold price. We had a break in structure here above with a fair value gap. That's our rule. We entered in again. Stop loss would go down in here, and as soon as we break that high and that high, we start to move our stop loss up, saying we want this to remain open as a breakaway gap. And then we start to scale out. We start to chase our price up. You finally hit our target. You make some pips off of that. We come back. It's created a new one, and look at that. It's driving right through off the top of that fair value gap. And it is. There's our rule. And I didn't see it. There you go. Getting too tired. Break in market structure to the upside. Fair value gap. Return inside it. Tap it. Leave it open. Leave a portion of that open as the breakaway portion of the gap. And we're still moving up. Same rule. It works every time. It doesn't work every time. It works most of the time. So again, just a general setup. If you practice this, you see it every day, ladies and gentlemen, you are going to see some profitability in your charts. I hope this was helpful, and that is going to be it for me for the day. Beautiful run day. This will be a one for the books. This is my journal entry for October 6th, 2023. Thanks for turning up, and I wish you all a wonderful weekend. And remember, we got to help each other out there in the world. Stem the flow of hate, love your fellow man, and pay it forward. If you have an opportunity to pay it forward, if you become fortunate to make some money in the markets here, pay it forward. How about your fellow man? And know that I love you, man. You're all people out there. We're all trying to make our way through this world. So I wish you all the best, and I'll see you again on Monday.